Okay, so I was wanting to get long here. Did not go
Order
above
canceled.
that bull bar, so we're going to skip that. Let's go ahead and do the daily review. First bar, and if you've been watching the daily reviews lately, I've been talking about how the first bar, when it's a big bear bar like this, lately those have been bought pretty quickly. So bear bar, and then it was bought, got a pretty big swing up. Bear bar, it was bought for at least a couple bars. This was the Juneteenth, so this was not a full day, so I wouldn't trade that anyways. Bear bar, it was bought, and there was another example that was then here bear bar, and then that was bought, and you know there's patterns like that that will occur, and if you're paying attention and kind of setting your charts, then you can start picking up on those patterns. So first bear bar. So if someone was seeing that and they wanted to trade that, what could they do? Well, based off the previous examples, if they bought the close of the bear bar and then put their stop maybe 3 points below, like down here, and then went for a reward of 10 points or 15 or 20 points, then if they have applied that over the last month, that would have been very profitable. So if, just from what we've seen, and then if someone was doing that today, then that's how I would go about doing that. We had the news over the weekend, so so normally when there's big news like that over the weekend, and then you're coming on a Monday, you're usually not too eager to be taking lots of trades because that news might carry over, and you might still have more going on that morning. So I'd rather not be too, I'll watch it, but I'd rather not be too involved. Ignoring that, just looking purely at the price action. First bar will mark is this buy here. So first bar is down. It fails to break below the moving average, fails to get to these lows. Then a big bull bar. After that, what do we get? So we get a big bull bar. It closes above the prior bar's high. And then the bar after that does not come back and test the high of bar 1. So hope you can see that clearly there. Bar 1 breaks above it. Bar 3 does not come back and touch that high of that bar. That's a gap. We have another gap. Here. Bear bar. Market breaks above it. Also breaks above this prior high here. And then the bar after it does not pull back and touch it. So there's a gap. Then you get a bull bar, a second bull bar, then a third bull bar. And this is an area that I like to be trying to scalp in and buy in there. Your risk isn't too large, maybe 6 points. And then go for 5 or 6 points and try to get your scalp. Don't really see a great place to get short here during this reversal. By the time it starts to look good, it's already kind of back to the moving average. And I'd rather be shorting up here to get room down to the moving average. Something that's kind of interesting to pay attention to is when you get these strong moves on the open. At what time does that market reverse down? So like today was 10:30, right here the market, or 10:25. That was the high before the market reversed back down. And a lot of the times you will see those reversals happen around 10:30 to 11. More rarely they'll get to like noon. So, and this is something I've made a lot of videos about the different times of the day, going from the open to the middle of the day. During that transition period, that's normally around 10:30 to 11, 11:30, and you can look for some reversal swing trades during that. In this case, there's not a setup here, so but that's the context of what's going on. We'll mark this buy. So what do we have going for us here? Well, we've had a wedge bottom. First push, pullback, second push, pullback, third push. So wedge bottom, I like to see 2 legs up after the wedge bottom. So here's the first leg. And then if there's a pullback, then often you'll get a second leg up after the wedge. You also have 3 bull bars in a row. All right, we're in a bull trend above the moving average. So this 4-point bar here, so it's reasonable to try to buy there and get a scalp. And you have enough room to get out before you get up to the highs here. So that's another good spot for a scalp. Market kind of works its way down here. I wanted to get short, and if you're trying to find it, but you just can't get an entry, you can go down to a lower time frame. I'm not going to mark any of. It's okay to short here. I'm just going off of what my thoughts were during the day. If I'm short, I was wanting to short here. Didn't quite get the entry that I want. But shorting down to what? Well, this would be the first target, the open of the day. So if you can find a way to get short somewhere up here, then you just want room before it gets down to the open. And couldn't quite find an entry because there's you get a couple bear bars, but then it has a big tail on the bottom, and then you get a bull bar. A couple bear bars, but then you get a bull bar. You're kind of right into the 200 moving average, so not really great places to try to be selling through here. But it does end up collapsing down. Like, what about selling below this bear bar? That'd be okay, but like I said, I would rather be shorting up here to get down to this target of the open, versus if you're shorting here, you're already shorting into that target. Now you could say, well, there's still the low of the day as a target, and yeah, that'd be fine, and clearly that would have worked. But just for how I was reading it today, I would rather not be selling right into the open like that. Around this time, around 12:30 or so, around 1, we got news that Iran had retaliated in some way against you. I didn't really read the news clearly. I think they attempted to attack U.S. base, but the missiles didn't get. I think they were shot down. Surprisingly, the market ended higher. So we ended up with 8 bull bars after that. So, and then oil also is down about $5. Let me pull up the oil chart here. Pull up the 5-minute oil. Here's the news. Oil is down $6 after the news that of Iran's retaliation. So that is surprising me. The E-mini being up is not all that surprising. But oil being down after an increasing conflict in the Middle East, and that is surprising for oil to be down. But 8 bars up through here. A couple buys I want to mark here, probably right through here. I think those are. So I was co-hosting a live stream on Hola Prime today. Some of you might have been watching that, and during here, I was wanting to get long here and talk more about it, but I wasn't the host. That was my first time with them, so I wasn't going to butt in and show what was going on here. But they were kind of having their talk about something else. But what I was wanting to do was to be buying through here. Failed break below the low of the day, double bottom. And then the bull bars just keep piling on. 1, 2, 3. Now we're above the moving average. 4. Probably going higher after this double bottom, failed break of the low of the day. So buying here or buying above that. Those are good scalps. You got room to the high of the day, and there's some sort of trap going on here. That trap was good enough to get 8 bars out of. After 8 bars like this, consecutive bars, you're probably getting a little bit more up. And, well, this might be that a little bit more up. So after 8 bars, any pullback is probably not going to immediately just reverse down. Like, it's probably not going to end up as an A. It's not going to go up and then down in like the shape of an A. It's probably going to go up, and then these pullbacks will be bought, and that's kind of what happened. And then this was that second attempt, and 15 minutes in the day, this is probably how we're going to end up, somewhere right in this little range. So that's the day. I didn't really know how today would look with the news over the weekend, but I mean, to me, this looks like pretty normal price action. The bars are normal size. They're around. I mean, some of them are larger, but a lot of them are kind of around that 5 to 7 point range, and that's what I like to see. So I'd love to get back to a less news-driven market and a little bit more price action. And even though today was a big news day, but based on the price action, it looks pretty normal. It doesn't look too news-driven. I mean, clearly this did have something to do with the Iran conflict, but at the same time, like nothing it didn't get too exaggerated. Nothing was extreme here. It was just consistent buying. It was obvious that the buying was consistent, and this trap should have been fairly obvious. The low of the day, bears tried twice to go lower and couldn't. Then they get above the moving average. That should be a fairly obvious place to be buying there. So yeah, that's what I got for today. Let me know if you guys have any questions, and we'll see you in the next video.